forward to the week ahead. Let's just have a look round. Quite quiet, I would say, from a sort of opening period for the week.
I was noticing with cable, seeing a bit of downside at the moment.
Just getting cable, have a little tester of the low actually. We'll just make that a little bit bigger. We obviously stepped quite a bit lower here. Midday Friday, and bit of a breakout. Technically, this we took out some levels, and if you just take this chart back a little bit, we kind of broke down through the low points that we'd had on around the election. So this is the kind of US election phase here, the 8th and 9th of November. That was the low there, was 123.61. We actually also broke the low of earlier in the week, and that kind of set up like a double break to the downside, which in the end got us down to the 123 handle. As you can see, since then we've had, overnight we've had very rough resistance, like in between these two levels. So it's a little bit messy. It's not quite clean technically here, but you can see what's kind of happening. Consolidation of that break lower. And if we looked at a different FX market, definitely the theme of last week for sure was just a repeat of the week prior to that. I'm just going to take the start on the long term here. This is the weekly chart for euro dollar, and you can, let me just zoom in. Look at these two massive candles, red candles here for the election week, and then last week, huge movement, of course. And technically speaking, we're down to lows we haven't seen this year, so new lows for the year set at the end of last week on the big breakout, yet to quite reach it down to the 105 handle. This is so important. If I just zoom out slightly, you'll see it's the kind of double bottom from 2015. So we'll see this week. To start with, even though cable's just testing the low, we've actually got euro dollar doing the opposite and just tickling higher, and just keep an eye on that high point from from Friday midday, 106.54 on the futures. We've got R1 in the mix here, but just a touch of euro strength, what looks to be a little bit of pound weakness. If I just brought my euro pound chart in, and let's just have a look at this on a slightly longer time frame, then we definitely had some pound weakness on Friday and euro strength, and it's kind of repeating now. But yeah, we definitely had that push to the upside, and just almost gone up to test that Friday high this morning. But it's quite quiet. Check out equities. It's very much, this is the DAX, and definitely still trading within Friday's ranges, and Friday's range was pretty tight, it has to be said. For the DAX, it was about 100 points, and we're well within that so far. Opening around about the very middle point of Friday's session, and just tickling a little bit lower now, but there's not much news flow from this morning. We'll talk about what happened over the weekend in a minute, but it's worth noting with the S&P, just add another line in here. Look where we're finding resistance this morning so far. It's on this sort of double top that we had from Thursday's session. We broke that briefly Friday, and in the end topped out 2187.50. Then we kind of reversed into the sort of European close and settled down a little bit, but always worth looking at the weekly chart. Let me just get rid of all of this annotation. Sorry, 1 second, just tidy this up a little bit. You can see here that ultimately, I'm going to draw a different line. The all-time high for the US S&P 500 equity market set back middle of the year, back in the summer, and it's 2191.50. Okay, and as you can see, we're basically there. 2191.50. If you go to a daily chart, then you can see this a little closer. Actually, sorry, that's let me go on a continuation chart. Apologies. Here we go. So you can see that the all-time high was set on the 23rd of August. It's actually a bit of a double top because we're pretty much there on the 15th of August as well. So it'll be interesting. Are we going to see the S&P test or even make new all-time highs this week? That's something to think about. I mean, certainly, I would say since the election, what was the notable thing about last week, and how really the only difference between last week and the week before, because there were a lot of similarities. We've already spoken about the dollar strengthening a lot in election week and last week. T-notes, or just global bonds generally. That's not the T-notes chart. That's crude oil. Hang on. Sorry. Ant's been repositioning his charts. Here we go. This is T-notes. And big move to the downside in election week. Big move to the downside last week. So this is very much the common pattern. Election week and last week, big dollar strength and big downside for global bond markets. This is longer duration yields climbing. Okay, the biggest 2-week sell-off for T-notes since 1980 or something, or the 1980s. You can see the key test we had, and in fact we did breach it briefly, but we tested the December 2015 low here. This is an incredibly important price. If you just zoom back slightly, there was a lower point in December. That was down at 124.29. Okay, so huge movement here. Dollar strength, yields rising, big theme of the fortnight since the election. What was the only notable difference last week compared to the election week was equities did not really continue to rally. If you looked on a weekly chart for equities, well then you can see that we had in the end a big upside big upside in election week, but last week, yeah, sure, we had an up week, but it was tiny. So, and we haven't made a test of the all-time high. So, certainly some momentum exhaustion, you would say, in the equity space last week, even though we had continued strong momentum going on with the dollar movement and yields. So, really interesting to see this week what the equity space decides to do here. Are we going to get the S&P testing that all-time high? It's right in touching distance, 21.91.50. I mean, it's right there, so it wouldn't take much to get up there and have a little test. So what's been happening over the weekend? Pretty quiet. I would say that just a couple of notable developments with regards to European politics, and one quite amusing turn of events given what's happened in politics recently with Brexit and Trump, and the fact that pollsters have got it spectacularly wrong on really both occasions. And even after the US election, you had the French pollsters saying, well, yeah, fine. I mean, the British pollsters and the US pollsters got it wrong, but we're not going to get it wrong. We never get it wrong. Well, they just did. Let me transition my screenshot. Well, actually, this chart, I'm not quite happy with this chart. But look, we had the primaries. We had the presidential. This is really the beginning of what is going to be a long road into the April and May presidential elections in France next year. So we had the French Republicans primaries round 1 over the weekend. This is where you got a whole bunch of guys running to become the Republican candidate in next year's full-on presidential election. Okay, now the pollsters were categorically saying that Juppé was going to win the primary over the weekend. He was the definite out-and-out favourite. You then had Sarkozy in the mix. Juppé is a former prime minister. Sarkozy is obviously a former president. And then a guy called Fillon, who's a former prime minister as well. But they were definitely shoe-in for Juppé to take the win in round 1. Except he definitely did not. In fact, he only just beat Sarkozy. It was Fillon who came in the strong winner, who won over 40% of the vote in the election over the weekend. Juppé came in with 28% and Sarkozy 21%. Sarkozy now dropping out of the race. Okay, so that was a big surprise that pollsters didn't expect either. So it seems French pollsters are as bad as everybody else, even though perhaps they're not quite as prepared to admit it. Now we move to round 2 next weekend, and it is a straight fight. Fillon versus Juppé, and on the basis of the numbers from over the weekend that just gone, it now looks like that Fillon's in the kind of front-running place to win the primary, and then therefore square off against Le Pen. Basically, whoever wins this primary is going to be the candidate that probably goes head to head with Le Pen, the National Front Party, the Eurosceptic Party, the anti-establishment party. That's the Brexit, that's the Trump version of French politics. It's Le Pen and the National Front. What you're going to see probably next year, April, we'll have the preliminary round of the presidential elections. The top two candidates then move towards the final round, and it's most likely going to be Le Pen against whoever wins this primary. So probably Fillon. Okay, Fillon's a bit of a Thatcherite type politician, and we'll see. I mean, you're still getting people, despite what happened over the weekend, you're still getting this kind of blissful, ignorant sort of view that it'll be okay. Le Pen, she can't, can she? Le Pen can't win, surely. That's still the kind of view, except that obviously Brexit and Trump tell us that she absolutely can win. So look, this is an interesting development. I don't Fillon and Juppé, in all honesty, there's not too much different between the two. The only takeaway for me from the weekend is that French pollsters are as bad as the rest of them. So it really kind of, I would say, slightly and only marginally increases the Le Pen risk. The other thing on European politics, Ange is going for term number 4. She's finally announced the least surprising news. We've been expecting this announcement for quite some time, but Germany have a general election, September I think it is, next year, and Merkel was expected to run for a 4th term. It's just she hadn't really confirmed it properly, and she has now. So she's already served for 11 years, so she's in her final year of her 3rd term, each term being 4 years, and she's going to go for a 4th term, which would take, if she wins, would take her up to 16 years in office, which is quite remarkable. But given all the political instability, uncertainty going on, especially in Europe, but obviously in the US and actually in a lot of places, Hong Kong, Kuwait, you name it, there's political instability across the world. In the face of this instability, it's not necessarily a bad thing to just have a bit of stability, and I guess that's what Merkel brings. Let's have a look at the calendar for today, because ultimately there's nothing on it, I'm afraid. I mean, as far as this week goes, let's have a look at the week actually before we look at today. There's no point really looking at today. So we do have Draghi speaking, but he spoke last week, and he made some reasonably dovish comments. I guess he probably slightly increased the chances that somehow they're going to try and engineer an extension to QE. So he's speaking to that. That's pretty much it. But as I said, he spoke to you last week, so it's not likely going to add anything new. So I wouldn't really see that as a particular market-moving event. We've got data-wise tomorrow, consumer confidence in the EU. We've got existing home sales and API oil numbers overnight out of the US. Wednesday's looking much more interesting. We get the flash manufacturing PMIs. This is for the month of November. The preliminary data, we get that from France and Germany and Europe. They're not on this calendar. Midday will be the UK's budget. Hammond will be delivering the first post-Brexit budget. And it's just going to be pretty interesting to see. This is really the first early test of whether Trump's win is going to have any kind of influence over kind of political, fiscal strategy, more at a global level. So will Hammond deliver fiscal stimulative response and really just kind of slightly change direction from his predecessor Osborne, who was much more focused on reducing the deficit? So we're going to see Hammond on Wednesday deliver his first ever budget, and this is the first budget since Brexit. That is definitely important. Definitely will be important for UK assets, for the value of the pound. It'll be important for UK equities, so certainly a big event. In the afternoon on Wednesday, we got the manufacturing numbers from the US. We got new home sales, and then the Department of Energy oil numbers. Also, I should point out on Monday, not on this calendar, we got more OPEC discussions. You're used to the situation now. OPEC headline risk is certainly going to feature all this week, all next week. They're talking in Austria today, more preliminary technical talks. The idea is trying to figure out how the hell they're going to deliver this production cut. Who's going to do it? It's trying to beef out the detail on this deal ahead of the 30th of November, where they're going to try and sign it off. So more news flow out of OPEC expected today. Thursday then, well, this is Thanksgiving. Okay, so US bank holiday, obviously, and it's definitely a very well observed bank holiday. What I mean is that you're going to get all of Wall Street at home. US markets will be dead. It will mean that the European afternoon is going to be incredibly quiet. Okay, so just bear that in mind. We've got a few bits of data in here, but definitely Thursday's Thanksgiving. Friday will be also slow from a volume point of view in US markets, but this is definitely all about retail. It's Black Friday, of course, and so the biggest retail day of the year for the US retailer, and it's become more and more of a global event, this kind of Black Friday idea where you get huge numbers of deals, discounts being done. So it's always quite a good key measure on how the health, what's the health of the consumer out on the high street. So that's the shape of the week. Today also, one other thing that's not on that calendar, we do have a Fed speaker in the shape of Fisher. He's talking at 1 p.m. Okay, bear that in mind. But again, not really particularly important this. Yellen spoke last week. We actually now officially have a 98% chance of a Fed hike in the December meeting, which is in 3.5 weeks' time now. Okay, so I don't think you're going to get anything new out of these lot. So let's just go back to the charts. Let me just talk about oil, because I haven't done that yet. What's happening this morning? We're just edging up through. Let me make this into a continuation chart. This is the daily continuation. Sorry, it's a bit, actually, you know what? I'm going to just get rid of everything and start again here. So, what we've got is the high point on Thursday last week, 46.58. We got the low point the beginning of last week, $42. It was quite an incredible range for the week. 10% range at these kind of prices, well over $4 range last week. This morning, we are threatening to have a little tester. Actually, let me just check something. 1 second. Okay, so that's annoying. All right, my continuation chart is actually printing the December contract, even though we're actually now trading January. So anyway, 46.58 was last. No, I'm going to go to a January chart. So we'll make, because we have traded above last week's price point, or we're really testing it. That's the best way of describing it. $47 was the high point on Friday. This is the resistance on the upside. And it's just all about OPEC, obviously. The big sell-off was about OPEC. The big rebound early last week was about OPEC. Where the price of this asset, where it goes this week, will be almost entirely due to OPEC. Okay, and it'll be entirely what happens at the meeting in Austria today. Are we moving more towards this deal happening? That was certainly the kind of news flow that we had on Friday. We had Iran being offered a deal whereby actually it would allow them to continue to increase production, even though overall the idea is that the group as a whole, OPEC, will reduce production. You had the Iraqi oil minister late Friday night saying that he's going to put forward 3 new proposals regarding the OPEC production cut at next week's Vienna meeting, which will be in line with the current OPEC policies. You've had Russia in the mix, supporting the idea of a cut and perhaps hinting they maybe want to get involved. So, when price is low, they start talking it up. It's not difficult. It's not a surprise, this. When price gets anywhere near 40, they start making comments about cutting production. And oh, lo and behold, price goes up. When price gets up above 50, well, then they do the opposite. They start saying, well, actually, you know what, we're not going to cut production. And oh, price starts moving down. Basically, we're in this range that suits that suits OPEC, not everyone. We're in a range that suits OPEC, anywhere kind of mid to late 40s dollars per barrel is perfect for OPEC at the moment, because ultimately it means that price isn't too high, allowing shale producers in the US to start switching back on rigs and ramping up their production. So they don't want that. They don't want to shoot themselves in the foot. So they don't want price too high. But then obviously they don't want price too low. Certainly they don't want to get back to the $30 kind of price points we were getting, and even lower, of course, at the start of the year. They definitely don't want a 3 handle on the price. That's too painful. So the kind of happy medium, whilst of course they would like price higher, obviously OPEC would like price at $75, but they recognize that means they will lose market share. So for now, they're happy to sit here mid to late 40s. Okay, so we'll see with the OPEC meeting in Vienna today. There's definitely going to be headlines on that, so keep an ear to the ground. All right, so that's probably it. There's not too much else to cover here in the briefing. Quite an uneventful weekend. You've got equities just really flat, I would say. I mean, let's just final look at the S&P here. You know, on Thursday we had a blip higher, but we've been very flat since, and so it'll just be interesting, as I said, to see if we get a move to 2190 or not, to test the all-time high. The dollar, are we going to get another week of dollar strength? For now, certainly the euro dollar's testing Friday's high, but cable's under a bit more pressure. So let's see. I'd say quite a quiet week. You're probably going to need patience, I would say. For sure, it's going to be a real key sort of component of this week. Don't be too gung-ho start of the week, trying to get points on the board early. I think you've got to just exercise a little bit of caution, a little bit of patience, and trying to force things in slow markets tends to end very badly. All right, that's it for now, guys. Have a good week. Thanks a lot.